now, do you sell now, right? It's never quite that clear, unfortunately. By the time, normally, when markets starting into a corrective process, I should say, and you kind of go through this little period of gyration, kind of trying to get to that confirmed signal in the markets. And we now have that confirmed break of the trend that we were talking about. However, by the time that occurs, the market typically gets fairly oversold. And that's where we are now. But here's what you need to know before the bell this morning. So on Friday, we talked about this idea that we could have a correction if the market rallied to the 20-day moving average. This was the conversation last week. If the market rallied to the 20-day moving average and failed, we would likely test the 50-day moving average. That's exactly what happened last week. And as we talked about, we had seen this kind of slowing of momentum in the markets. And this is really kind of the conversation and topic of the newsletter this past weekend as well, is that we saw this kind of slowing of the momentum. So this very tight trading range we had running along the 20-day moving average was showing real signs of weakness. And we had started kind of topping here just recently. Had set several attempts kind of at this top of the market. The market really kind of struggled there. Started seeing that sign of loss of momentum. And then, of course, Thursday of last week, we initially broke that 20-day moving average. That was the first crack, really, in the markets that we've seen in quite some time. And we said then, on the Thursday before last, we said, okay, what we're looking for here is, again, don't knee-jerk reaction on this break. Look for a failed retest of the 20-day moving average. Well, the next day, the market rallied and actually got back above the 20-day, kind of tried to hang in there a bit, gave up that attempt, and then, of course, on Friday, we sold off and actually tested the 50-day moving average. So here's the issue now. So now, do you sell now, right? It's never quite that clear, unfortunately. By the time, normally, when markets, go through a corrective process, and we're starting into a corrective process, I should say, and you kind of go through this little period of gyration, kind of trying to get to that confirmed signal in the markets. And we now have that confirmed break of the trend that we were talking about. However, by the time that occurs, the market typically gets fairly oversold. And that's where we are now. So here's where it gets a little bit dicey. Be careful, don't sell right out of the gate this morning. Markets are likely going to open up this morning. We're up about 20 points or so. The Nasdaq's looking up about 104 points according to the futures right now. So again, we're going to have a nice little bounce coming out of the gate this morning. Use that bounce as an opportunity if you need to start reducing risk in your portfolio or rebalancing things. This is what you're looking for. You're looking for this type of activity. Now, one thing to remember, we're still in, don't go crazy and sell everything in your portfolio. That's not risk management, right? That's just knee-jerk reacting. Remember, we're still in the seasonally strong period of the year. We're moving into earnings season, which is likely going to still be fairly good. So don't overreact here. And on this rally, yes, use whatever rally we get today, tomorrow, next day or so. Use that to rebalance risk in your portfolio. However, if the market gets back above the 20-day moving average, which is entirely possible, we're going to start kind of moving back up because we've now actually had a test of the 50-day. So again, this is that dichotomy in the markets. This is one of those things that kind of trap investors from time to time, is that the markets can do things you really don't think they should. It's like, okay, we've had this huge run, and now the market's correcting. We're going to have a much deeper correction. It's possible. But if we go back to 2021, we saw a lot of this action in 2021. We'd have sell-offs to the 50-day moving average, market rally right back up and keep going. So we had a very low volatility advance for quite some time in 2021. So that's exactly potentially what could happen here. So my point is, as you start to manage the risk in your portfolio, move slowly. Don't do big moves all at one time. Let the markets kind of dictate. If we rally, fail, take out the 50-day, more action is taken at that point. So again, be a little cautious, be slow, but that's what you need to know before the bell this morning.